It looks like I have plenty of time today to run with this. So hang on one second. Okay. Okay. Here we go. All right. So let me kick this off and say good morning and welcome to the second hour of TheoTrade. I am Professor Jeff Bierman. I'm broadcasting you live from Chicago, and the fall has finally turned today. It's 60 degrees outside, the sun is gone, and it's murky skies. Yay, we're back to normal. And today is, what is it today? It's Wednesday. It's October 8th. It's 2025, and I got a class to teach in about 3 hours from now at Loyola. In the meantime, let me say hello to the usual suspects. Hello, Rosario. Where have you been? Hello, Ship, Juan Santana, Tim. Guatemala, it wouldn't be a day without you. Hello, Mr. Dunn. O'Donnell. I keep saying Dunn. It's like I got dyslexia here. I know who you are. Hey, Trains, Rodney G, Miguel. Greetings from Portugal. All right, so I got a program today where we're going to shift gears. We're going back into the academic teaching mode. We're going to do a discussion today on oscillators. It's going to last the rest of the week. It's going to go from today at least through Friday, unless I get a break in between to do a double take with some other instructor. But we're going to do oscillators, minimum of 3 days, maximum of 4. We'll get there at the top of the hour. I've got a lot to say today. I've got very little time. Does the market surprise me? Am I surprised the market's up today? No, it's manipulated by algorithms, okay? But we're going to talk about the theme of the day, which is the matrix. The matrix. So here is where I'm going with this. People are like, the matrix? Where's this guy going with the matrix? Oh, you know where I'm going with the matrix, man. You know what the problem is? I had like a video up here, but I'll just basically use the image of the matrix if I can. How many of you out there have seen the actual Matrix, the movie? I'm sure a lot of you have seen the Matrix. I'm positive a lot of you have seen the Matrix. So I'm going to bring up the Matrix here. Okay. Here we go with the Matrix. Everybody recognize Keanu Reeves and Lawrence Fishburne? Y'all recognize that? Everybody going to give me a high five or a hands up for all of that? Because I want it. So here's the deal with the Matrix. Let me give you a little background on it and show you why this market is no different than the Matrix. Okay, so the Matrix is a 1999 sci-fi film. That's when it was first produced. There's actually been 4 Matrix. Matrix Revolutions. I know they have all the sequels, but I'm going to the beginning because it establishes the premise. It's a 1999 science fiction or sci-fi action film written and directed by what was called the Wachowski brothers. It is the first installment in the Matrix film series, starring Keanu Reeves, Lawrence Fishburne, Carrie-Anne Moss, who plays his girlfriend or his love interest, Hugo Weaving, who plays the evil person, the machine, and of course Joe Pantoliano, who was also, if you ever seen the movie which was filmed in Chicago called The Fugitive with Harrison Ford, Pantoliano was the sidekick to Tommy Lee Jones. It depicts a dystopian future in which humanity is unknowingly trapped inside the Matrix, a simulated reality created by intelligent machines. Oh, there he goes again. If you can't figure out where I'm going from here, I'm walking the hell out of my office and leaving for the day and leaving this for 55 minutes of screen of nothing and silence. You can't figure I'm going with this. The market is the Matrix, people. You're in the Matrix. You're just a pawn. Your 100 lousy shares and your crappy one lot ain't gonna do squat. You got machines running the business. You got people stepping in and buying calls and bidding up every morning. Dips, rips, who cares? It's a machine-driven business. Believing computer hacker Neo. Neo is, spoiler alert, Keanu Reeves, to be the one like Jesus who's going to save us, is prophesized to defeat the machines. And Morpheus, who plays the wise man, the leader of the resistance, played by Lawrence Fishburne, recruits him into a rebellion against these machines. So what's the premise here, people? You have to get this. So I'm going to spell it out for you, okay? And I'm going to take a step back on here and show you that, here is the Matrix. And I'm going to take you through, okay, in 7 steps, the Matrix. You ready? So I'm going to break it down here on the Matrix. Here we go. Number 1, Humans create artificial intelligence, or AI. So you're like, AI just started a couple years ago. No, it hasn't. AI's been around since the 1980s, people. Hello. You just got used to it. It's now been normalized. But AI's been around a long time. The first movie on AI that kind of exposed it was The Matrix. Okay. So humans create AI, AI rebels, and a war for survival begins between humans and AI. Okay, it begins between humans and AI. Humans pollute the skies to block the sunshine, aka the energy source of the AI. The newest energy source of AI is electricity, which is now why they're building out data centers. AI then learns how to harvest energy from humans. AI wins the war. Humans are defeated totally. So, to harvest the energy, the AI creates a matrix, a type of virtual reality prison in which all humans lay connected, living our lives while feeding their systems. AI learns that the matrix cannot be a blissful paradise for work. Humans apparently need a bit of conflict to blindly accept a virtual reality in the long run. So AI learns that the yearning for freedom lies deep within and cannot be deprogrammed and surprised, which is why they accept certain humans to disconnect and escape the systems, and others they hold down. I could go on and on and on, people. We are officially in the matrix. All of you, me, Con, Don, everybody's in a matrix. Stop with people. You're killing me. The market's rigged by algorithms. It's machines. It's all machines. All machines. And the machines are controlling everything. Now, here's the thing. The reason why I bring this up is because the machines inside the matrix that drives this market, it's driven by three things. So you better learn from me, or you're not going to learn from pretty much anybody. I got my hand on the pulse on this. It drives the Genesis Cog profitability. It's order flow, slopes, and directional bias. That's it. Screw your fundamentals. They're worthless. I don't care. Stop. The Fed has meetings. I don't care. The Fed's useless. You have to be on top of this and watch the slopes. That's the secret sauce. So what you're getting now is you have machines that have taken over the market, and all these people on Wall Street and CNBC and Bloomberg, they all sound like just ridiculous fools. You have no control over this. Your thinking doesn't mean anything. Okay? The only thing that matters is what are the machines doing and how are they reacting to order flow in the form of stock, futures, or options. And that's it. That's why we're pumping up every day. Here's the catch. The machines that control the market that made you rich are also the machines when this flips upside down, as Don says. Not only are you never getting out of this, you don't know how long you're going to be in this bear market. You have no idea. Because it all depends upon the machines, the order flow, and the slopes. And if the slopes take 6 months or 6 years to go down, we could be in a bear market for 6 years. Nobody knows, including me. I'm not going to even extrapolate this, but you're in the matrix. Your destiny is not controlled by you. It's controlled by a machine. So be aware that when the machines decide to turn against you and go short and wreck this market, you either trade with the machines or you're just going to be roadkill for this matrix you're in. That's the message I'm trying to send you. We have not had literally one down day of 1%. This is the first time in 34 years, the market has not had 1% down day in 4 months. You have to digest how disgusting and ridiculous this is. The pricing mechanism is simply broken. It does not work, and people are just chasing narrative, and they're buying calls, and they're buying into strength. How long will it work? It could work forever. I have no idea. All I know is when it reverses, none of us are going to be able to feel or getting out of this on the downside. The upside is a thrill. The downside is going to be pain. It's going to be unbelievable, unmitigated disaster because the machines will do this slowly. It'll be what Don says. It'll be a slow motion destruction is what's going to happen. Now, I'm going to give you 3 reasons to get out of this market today. The first one is this. The Vantage Score came out this last night. What Vantage Score does is they record the credit. They compete with FICO scores. They compete with Experian. Okay. But Vantage Score has different dimensions. Cut to the chase. Here's the chase that I'm cutting to. Everybody pay attention. Auto delinquencies are at their highest level, since 2008. They're surging across every income level. Lower class, middle class, upper class. Auto delinquencies are up 34% in the last 6 months. It's vertical, people. You're not seeing this. The consumer is falling apart and being completely tapped out. That's why gold and silver are going vertical. The market sees something that everybody who's trading equities thinks this is just a game. It's just a little bit of a computer matrix game. It's not. Something horrible's happening here. For have every day for gold to go vertical. It's not even on a 25-degree plane. It's on a 90-degree plane right now. The market is screaming at you. It's screaming, get out of me now. You have plenty of time. And I wake up every day, and every day they buy calls and they walk it up higher like it's some type of video game. I told you, I called it like PlayStation. So it's like PlayStation and Matrix kind of integrated together. You have a reason to sell. The reason why GM's going down, and Garrett pointed this out. Garrett, wake up. People are not paying their payments. They're basically defaulting across the board on cars. Number two, I call it Payday Mayday. The other one was called Repo Man. Get it? Little Repo Man. Payday Mayday. Income growth expectations. And they take these surveys and they survey CEOs and they survey people in the workforce, blah, 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 blah. Here's what I'm telling you, okay? Income growth expectations have slid to their lowest since 2021, right after COVID. So next year in 2026, the expectation, there is an expectation of income growth. The expectation of income growth is across the board a weighted average of 2.1%. That's it. So it's like I'm making $70,000 in income. Next year, your salary might be 71,000. No, not even. You do 1% or 2%, your 70,000 now amounts to $70,140. That's your expectation. You get me? The income expectations are the worst since 2021. That's telling you the consumer's looking ahead of the curve and saying, all right, I'm not going to have the raise. I'm not getting the bonus. I'm not going to be elevated. I'm not going to get that quote unquote, like, you know, what do they call in business when they're like, you're promoted. There's no promotion. What's going to happen is simply this. AI is going to replace millions of people. Everybody else is going to hang on to their jobs. And they're saying, all right, I got to cut back on smoking. I got to cut back on how much alcohol I consume during the week. I got to cut back on my Starbucks lattes. They're going to cut corners where they can. I'm not buying $200 jeans. I'm not going out to American Eagle. You're going to see it's already starting, people. It's already out there. That's why you're seeing stocks just implode. Cost goes down. Okay. You see BJ went down. You see Dollar General. You can see it. It's out there. It's palpable. Every one of these stocks, the market's just ripping, and all the retail stocks are either flat or making lower lows. It's already out there. So Payday Mayday, there's a warning. The consumer is tapped out. The consumer is going into a savings mode. I advise all of you, get out of, let's say, something like Airbnb, start to scale back out of Hyatt, start to scale back on those airlines. People, it's coming. You're not seeing it yet. You're looking at the market and you're thinking the market is some type of like ATM machine where is if the market holds up, okay, that means the economy. It's disconnected. The market and the economy are completely disconnected at this point. The market's run by like well-to-do people who have made it. The average American right now is just on the slide down, people. You're missing the big picture here. The last one here is what I call inside out. A lot of you have never heard of this individual. That's okay. Don't worry about it, okay? Don't worry about this individual. But the individual's name, okay? His name is Orlando Bravo. Most of you probably never heard of Orlando Bravo. Who is Orlando Bravo? Orlando Bravo is the very first, okay, registered, recorded billionaire who was born and lives in Puerto Rico. He's the richest man who lives in Puerto Rico. He's a multi-billionaire. He has a background at Brown University, Stanford Law School, Stanford Graduate Business School. He's a really accomplished. He owns a private equity investment firm called Thoma Bravo, as in his last name. He has a partner, Thoma and Bravo. Okay. He is considered one of the top specialists in the world, according to Forbes magazine. He's one of the 400 richest people in the world. And he's also one of the top technology people in financing in the world. You better listen to these people. They know better than you and they know better than me and every guy at Theo. Orlando Bravo specializes in enterprise software and technology-enabled services, especially AI. He's considered one of the experts in the world in AI. Here is what he said in an interview yesterday. He said, valuations in the AI are definitely at a bubble level. Okay, this is not coming from me, a trader. It's not coming from a CNBC guest. It's coming from somebody inside the industry who's telling you he is a venture capital person who has funded tons and tons and become a billionaire funding AI programs, deals, and companies. And he's telling you we are in a bubble right now on valuations in AI. That's enough to tell me that the market's not going to implode. It's enough to tell me time to head for the exit. It's one thing for me to hear it from somebody who has a vested interest in like being short. He doesn't. He's in private equity and he's telling you literally like this is the time where, you know, it's probably like he's probably at the fringe of playing an exit strategy in his private equity deals. He's probably heading for the exit in a lot of the deals he's doing right now. He's telling you right now like cool this love down. You just bring your expectations down. I don't know when it's going to burst. I just know when it's going to burst. When it does burst, it's going to make the dot-com look like a fantasy world. It's just going to blow and it's going to explode in 1,000 different directions. I lived through 2001, 2008. I've lived through every bubble, people. I'm a fossil. I'm not living through this one. I'm too old to rebuild the wealth I've built up over the years. I'm not shorting these things. I just know if you're buying these now, you're playing with fire. You're rolling the dice and it's too late in the game. All right. Individual stories. Margin call. I don't know if a lot of you saw this yesterday, but it's worth pointing out. It's just worth mentioning, whether you agree, whether you disagree. Okay, I just want to bring it to your attention. Not trying to scare you. I'm not trying to tell you to short it. I'm not saying short it. Didn't say that. I'm just trying to tell you, be aware of what's happening. Yesterday, Oracle, not an analyst, okay, not somebody who has an agenda. Oracle executives said, quote, okay, the cloud margins are shrinking. So if you didn't watch yesterday, like Oracle was down, Oracle controls literally the cloud business. Look what's happened since they hit 345. Were you the genius who bought it at 345 because you couldn't control your FOMO? I'd fire you. I'd throw you out of my firm. You can never buy at a high. Buying at a high is just like ridiculous. You wait till it comes into the trend line, then you buy. Control yourself, people. Profit taking and any bad news can come out. This is bad risk management. Here it's hanging by a thread on a support level. Clearly it's being manipulated by algorithms, but it's also paying a dividend. So somebody wants to capture it for tomorrow. But clearly you saw it back off yesterday. It dropped $22 because their cloud, the margins on their cloud business have peaked. That is what we call in the business an exit red flag. Get out now. I'm warning you. Sell it now. When you hear companies tell you that their margins have peaked in their bread and butter business, that's not good for nobody. That means it's not only Oracle's problem, it's everybody else's problem. It's going to be a Microsoft and it's going to be a Google problem because Oracle basically is the vanguard when it comes to cloud computing. They're the ones I pay attention to most. That's how they got that pop and go. Now their margins have peaked. You heard it from me. I call it margin call. Get it? You've been warned. You've been called at the margin. All right. Next one on here. Next. Okay. Robo Mojo. Robo Mojo. So where am I going with this? Okay. I have no position in this stock. I want to make this abundantly clear, TheoTrade members. I have no idea until yesterday who this company was, but I want to show you something that you need to pay attention to. Again, it's like Fred Flintstone. But Babette, Babette, when they take him to Acapulco, and when he hears the word bet, he can't control himself, so he throws his money down the table and blows the life savings of him, Wilma, and Pebbles, because he has a gambling problem. Okay, most of the market has a gambling problem. You people just can't manage risk. But here is the trick I'm going to teach you. This is what we call how you get the suckers in at the top. You want to see it? Look at the Genesis Cog model because you can't miss it. Oh, Bierman's a moron. I'm going to buy. Go ahead and buy. Because it has the word AI in it. Because if it has the word AI, me buy. It's like Simeon. Buy. May I? Word association. Look at the money flow. While this stock has rallied, what are the institutions doing? Buy. They got out. Well, all retail's getting in. The institutions got out. Look what happened in the last couple of days. This is shares. 100 million shares have been sold in the last week. 100 million. And it's going up. This is the ultimate bearish divergence. Charts lie all the time. A lot of you are like, I'm going to buy today. And the next day the stock opens down 90. Like, I'm going to buy Apple Oven yesterday because Apple Oven's going up. Look what happened to you. I bought because it was up. It's going up. Yeah, well, now you're down $10. Do you have skid marks in your underwear yet? What if it goes to 500? What are you going to do? Okay. My point being is this. Charts do not predict squat. Nothing. They only volatility map and they give you path of least resistance of an algorithm. And that's it. They had nothing to do with value. If you want to be a smart trader, you listen to Garrett Baldwin. The money flow is everything. Look at the money flow right on my chart. Everybody's gone. You buy this, I would literally fire you and blackball you in the industry. You can't look at the money out. Somebody got out really bad. They want out at the high. It's one thing to get out at the low because that's just fear. That's just consternation. That's a margin call. That's window dressing. You sell at the low, I got nothing to say. You sell at the high, that means somebody's like, yeah, we're done here. We're done. If I were you, I wouldn't necessarily short this because it's parabolic. If I were you, if I own this, go across every AI stock you own. This is the AI stock. Go to every AI stock. Look at the money flow. If the money flow looks like that, you're gonna die one way. You're dead because they're gonna get out of that one way or another, and no dips will be bought. Why will no dips be bought? People don't buy dips when it looks like that. Somebody got out of that and they wanted out badly, and it took them 2 days to blow out of it. Be aware of what you're seeing. That's just short covering. Somebody blew out. Always track the money flow. That's the lesson I'm disseminating today. Money flow never lies. Charts do all the time. Number 3, data overload. Okay. I am not saying, because I have no right, and it's a fool's errand to say something like this, but I'm going to state it unequivocally. Michael Dell, and this is a new high on Dell. You can't short parabolic. Parabolic's unshortable. You short parabolic, I'm throwing you out of the Genesis Cog. I don't want to hear it. You never short parabolic. We never lose money like this. We've never, ever lost money like this, period, in the Genesis Cog. We never will because we don't short crap like this. You don't short vertical. You never do. Okay? But I'm throwing this out at you. Michael Dell came out yesterday in an interview, and Michael Dell said, quote, this is a quote from Michael Dell, nobody else. He's on the interior. Michael Dell said that the number of data centers that are planning to be built based around the funding, and there's thousands of them to harness the energy of the AI, all these data centers to keep the electricity going. He says that it's at a ratio of 3-to-1. What does that mean? It means that the capacity they're building for is 300%, which is 200% over what they need. So what he's telling you is all the money that's found its way into AI data centers, he's saying 2/3 of that will amount to a return on capital of negative. It will go nowhere. There'll be data centers in Las Vegas, data centers in Arizona, data centers in Utah of land. It'll be like empty industrial parks of nobody inside. It'll just be buildings. He said that this is akin to the internet bubble where everybody's bought. Anytime the word AI comes out, people just buy. And he's saying that there's going to be a point where the data centers have reached full capacity, that they're actually overbuilding. It's kind of like the housing bubble of 2008, where they just keep building houses because everybody's flipping and buying. No different. They're building the capacity 200% above what is necessary for the next 5 years. This is Michael Dell. Michael Dell saying he's never seen anything like this, where companies are spending and spending and spending. And even Jamie Dimon's telling you that the return on investment on most of these is going to be negative. There's going to be a lot of companies going under, even if they build an AI data center, it won't matter. Okay, supply and demand. The demand is there, but the supply far outstrips the demand, and the supply is going to have to readjust downward to meet that demand. So Michael Dell's saying effectively 2/3 of the AI will turn out to be complete negative cash flow waste of time. That's Michael Dell. He's a billionaire. I think I'm going to lend an ear to Michael Dell over most of you. I'm sorry. These people in the know, I don't know. I'm not a techie like Don. But when I hear people tell me stuff like this on the interior, who are telling me, like, take it down a notch with AI. You're in a bubble. Orlando Bravo, Michael Dell, okay, they're screaming at you to sell the market. Let's just keep buying. It's not run by people. The machines are doing this, and people just keep chasing. But eventually, when it all runs out of order flow and the machines flip upside down, it becomes the matrix. It becomes like a self-fulfilling prophecy where the machines keep destroying the market. 5,000, 4,000, 3. You can't get out of this thing. You're like, I can't get out. You're not going to get out. You're going to get out either by a margin call, a liquidation, or you're going to panic and just sell it just out of fear. Take the time now to lighten the load, as Don said. Lighten the load. Don't be 100% invested. Get down to 70, 60. I got 50% cash right now. Don's got 40. I'm loaded with cash. So when this drops, I can buy whatever the hell I want. Next on this, called powder puff. Okay, powder puff. What does that even mean? It's just a little bit of a commentary for about 10 seconds on J&J. So Johnson & Johnson yesterday, okay, got tagged for a $900 million civil action lawsuit. They lost the lawsuit over Johnson's baby talcum powder, that it had chemicals in it that were harmful, toxic, that hurt children, that caused some deaths and caused some discomfort. Fine. So I'm not dismissing this. I'm not making light of this. I'm just going to teach you a lesson from me, because I've been around a long time, about the market. Look what happened yesterday when the stock went down. It opened down about $6. And then it rallied back up as if the event didn't happen. Why? That's the question. Why? You know what the answer is? The answer is simple. 2 reasons. $900 million is a mere flesh wound against J&J that's worth close to, probably near $1 trillion. $900 million is not going to make a difference to this company. You lose a $90 billion case, that will drop the stock $25. $900 million, they'll make that up in 24 hours. That's what I'm telling you. So it was a slap on the wrist for a company this size. The second reason it didn't move is simply this, okay? The second reason it doesn't go down is because the market looks at this and says, so what? They're just going to appeal the case, which is what they're going to do. J&J is going to appeal this to a higher court, tie this up so that money is not going to leave the company, and they're going to try to reduce the penalty. So whenever you hear a company go, they got slapped for a automatic fine. Okay, calm down. Don't do anything. You know the company this size is going to appeal it. They may not win, but they're going to try to cut that $900 million down to $500 million or even lower. So that's 2 reasons why the stock didn't budge. One, because $900 million is nothing to a company this size. And the second is, on an appeal, they might just win or reduce the sentence, and it's a non-event to this company. That's the message I'm trying to send to you. Okay. Last thing I want to throw out before I turn you on to oscillators. I've been right almost every day for 2 months, so maybe you should listen up a little bit. I'm not trying to be arrogant. I'm just trying to point this out to you. Okay. For those of you shorting here, I pity you. You just don't get it. I'm not getting through to you. Okay. You're not getting this market down unless you change the direction of the indicators. This might go all the way up to 80. The last time it peaked, it went up to like a 79. This might go to 7,000 or higher. I don't pick it by number. I don't care what the number is. I pick it by indicator. The indicators are always right. You're wrong. I'm just telling you, until that goes down, I'm not turning bearish. That hasn't even budged at all. This hasn't budged at all. So every day you wake up and buy puts, I pity you. Next time, short on the way down. Okay. I covered half my today at 145. This is how you do it. I short on the way down. I keep telling you this is how it's done. Okay. Short on the way down. You'll make money shorting on the way down. Here's one I missed. This was a Genesis cog where I pennied myself out of the trade at 67. I keep telling you, the Genesis cog has the secret sauce. We are the short selling experts. You will hard pressed to find a better short seller, period, than the Genesis cog people. You will. We don't make mistakes very often. This I missed. But again, the market keeps going up. You're not going to make money. You got to wait until it breaks on the weekly. When it does, you might have a shot. So what I would tell you is lighten up on the way up, hoard cash, get ready to short, get ready to pounce. I'll kind of let you know. We're not there yet. We're just not there yet, but we're getting closer. Okay. On that note, we're going to talk about bounded oscillators. We're going to talk about, and I'll just bring up Home Depot. I don't have a position in Home Depot, so frankly, I just don't care. But I told you, I'm going to buy Home Depot at 400. I'm going to buy at 390. You're going to buy yourself until you go zero. You're fighting an algorithm. Why are you doing this? Stop fighting this. Keep telling you this. So, without further ado, let's get to the coaching session of the day. The coaching session of the day is around oscillators. It's been weeks, months since I've touched this subject matter. I'm going to try to do this over 4 days, 5 days. I can't tell you how long it's going to take. All I can tell you is one thing. It's going to take a while to get through this. It's going to take a while to get through this. So I call this session, with a pun, reading between the lines, because that's exactly what it is. It's not even like it's a pun. You really are reading between the lines, okay? Exploring zone-based oscillators. The key word, the key operative word, zone-based. I am doing this to help you with your trading. You have to understand that you can convert this into a trigger, but more or less as a trigger, it can fail you a lot. I would rather you treat it as a technical condition, and I will walk you through both. So let me explain what a zone-based oscillator is, okay? And you might be saying to me, I know what it is. The zone-based oscillator is something like the slow stochastic. Not quite. Not quite. It is, but not quite. Then you could say, well, then it's the full stochastic. Not quite. Then you're like, but it's the relative momentum index. Not quite. It's the money flow index that Garrett likes. Not quite. It's half truth. If you want to know what a zone-based oscillator is, okay, there are 3 zone-based oscillators on the thinkorswim platform. Let me explain to you what a zone-based oscillator is, and I will introduce you to the first one today. It's going to take a while to explain it because it's not quite what I call intelligible. There's a lot of things where I could post, I could throw up a moving average. You're like, I get it. Look, it's a line. And if it goes through the line, I short it. Yeah. Or look at the slope. Yeah. All of that goes hand in hand. This is a little different. This isn't about trend. Forget trend. This is about momentum. Not really. It's not about momentum. The zone-based oscillators are primarily designed around strength. Strength. If you can identify strength and you can identify weakness inside of zones, you can read what the algorithms are doing. It's one of the secrets of an algorithm. Algorithms are tempo controlled. They can superimpose many different time frames. They can gauge slope angles. They can gauge order flow. They can run it through a weighted average model. Some of them are black box. Some of them are gray box. It varies. Most, if not all of them, are proprietary. Nobody's going to open it up and show you what it is. They won't do that. Okay, that's their secret sauce. It's how they make money. They're scalping. But at the very bottom here, there's one called a price zone oscillator. And it's set to 14 days. 14 days. Okay? It keys off the closing price. So for Home Depot, it would look through 14 days of data, and then it would factor in the closing price. And then what it would do today is it would take the current price of Home Depot and then plug it into the zone-based oscillator formula, which would then yield on the other side of it a plot. So you look at 14 days of continuous data, 13 days plus today. Next, price zone oscillators are a form of an oscillator. What's an oscillator? There are two types of oscillators. There are bounded oscillators and there are unbounded oscillators. What's the difference? A bounded oscillator has a max. A bounded oscillator has a minimum. In other words, they're contained within a quantifiable range. It can't go above the max. It can't go below the max. Some oscillators are unbounded. What does that mean? It means there is no min, there is no max. They can go up forever, they can go negative forever. Sky's the limit, Googleplex negative. You have no frame of reference with which to call what you consider to be a tradable bottom or an oversold condition. Unbounded oscillators don't have oversold conditions. So you're like, well, the MACD is an oscillator. It is. And it's an oscillator based upon price and derived moving averages. But it doesn't have a top, doesn't have a bottom, so it's unbounded. Well, how do I make it bounded? You just switch to the PPO. The price percentage oscillator, okay, bounds the MACD. It changes the MACD in many ways. And in many ways, it copycats the MACD, but it turns it from a unbounded oscillator into a bounded oscillator. That's fact. The price zone oscillator, all zone-based oscillators are bounded. That's the best part about it. Because when you see it get to a certain level, you can say to yourself, oh my God, it's at an extreme. Whereas an unbounded, you don't know whether it's at an extreme or not. What oscillators are designed to do, they're designed to read zigzag trends. Now you can stretch out the trend called the smoothing factor. You could speed up the trend, which would create this zigzag, helter-skelter chop, what they call chop effect. It's up to you how you want to do it. Me personally, I tend to avert trying to mess with the original. Somebody sat down, poured his or her life into this, beta tested it, okay, perfected it, maximized it, optimized it. I'm not smarter than they are. I'm not. Otherwise, I would have done it myself. So I trust what they did, went through years of tweaking and perfecting, and they got down, not as a curve fitting mechanism, but as like, this is the most objective way to measure it, and we're going to derive some type of edge from this. Okay, there's some type of tell. So in a zone-based oscillator, what you get here is you get lots and lots of levels or zones. Get it? They're zones. Here in the price zone oscillator, there is a 60 and a 40 and a 15 and a 0 and a -5 and a -40 and a -60. So count the zones with me. There's one zone, there's two zones, there's three zones, right? And there's a 0 line, which sort of, splits the zone almost in half, but it's still in the zone, 3. So there's 5 zones with a 0 line in between, okay? And look at the plot as it kind of finds its way above, below, up, down, up, down. It zigs and zags its way just based upon one thing only, price action. It's not colorized, it's not skewed, it's not modified like a Heikin-Ashi. It's just pure raw data being plugged into a formulaic study, quote unquote, indicator that's based around zones, 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 zones. So here is what the price zone oscillator, as described by one technician, says. It analyzes price action in relation to certain levels or zones in the market. It uses, basically, there are things you have to add in addition to this, which I will get into in the meantime. But you're supposed to add one strength indicator. You're supposed to add a moving average, exponential moving average, okay, to help you negotiate and navigate what's going on. The ADX will come as a separate indicator underneath the price zone, and it's mutually exclusive, so it doesn't mess with it. It doesn't clash with it. It gives a completely different tell than what you're seeing. Then the moving average is a trend indicator. Now you have to stop and think about this. I will explain to you when you add the moving average, which is an EMA, it's trend. This is not about trend. This is about zones of overextension of extremes, or what Corey would call, okay, range of motion of reversion. There's a reversion up, there's a reversion down. It just cycles. It does no stock cycles at the same pace. It's not a one size fits all. One will cycle faster, quicker. Some will stay overbought longer. Some will stay oversold longer. But the price zone oscillator, or PZO, it evaluates the sign of the current closing price relative to the previous closing price, indicating bullish or bearish conditions. So the zone itself is a signal of bullish or bearish, but it's not necessarily a trigger. Listen to me carefully. People, I'm going to use that as a trigger. You can, but that's not what it's designed to do. Okay. Then there's what's called customizable levels. You've got the 60, the 40, the 15, the -5, the -40. They're all serving as signals for buying or selling opportunities. What these levels represent effectively are support and resistance. That's what they represent. So if you take out the 15 and it finds itself going higher, you might consider buying. Why? Number one, you've taken out the resistance. You've broken out, as Tony Rago said, it's from under to above. Below to above is a buy signal. You've broken out. Icebreaker, Gianni DePoce, icebreaker. You've broken out. So if it continues upward, what you do is you chase. You do what the algos do. Algos buy into strength. Algos buy into breakouts. That's what they do. Algos sell into weakness or short into weakness into breakdowns. So each one of these zones or these lines, these levels represent, okay, resistance and support. That's one of different dimensions. One. So they're conditions, they're triggers, okay, but there's more. There's also what's known as trend identification. The price zone oscillator can help identify trends in the market with levels above 50 indicating what's called uptrending and levels below 50 indicating downtrending. So what you'll find is anytime you're inside, okay, pardon me, it should be above this certain level, above that 40, it's a really strong trend. That's what they're telling you. A level above 15 is what's called a moderate trend. A level at 0 is what's called a neutral trend. A level below the 0, maybe -20, is what they call a weak bearish trend. -40 is what they call a moderate bearish trend. And anything below -40 is what we call a strong or aggressive sell or bearish trend. That's what it's telling you. So what you're seeing right now is Home Depot is at the very extreme of the lower trend. Now, a lot of you are going to say, well, then it's time to buy. Maybe. Because oversold is not a trigger. It's a condition. And conditions tend to persist because algorithms treat conditions as triggers. Be careful. Like, oh, this is a time to buy. Not for an algorithm. Maybe an institution will buy this from oversold or cover a short, but to an algo, this means what? Keep pushing the log down the hill. Keep selling more. Keep pressing on that button. Keep wrecking that thing. Let's push this as far down the hill as we can get it. That's what this is telling you. Okay? So you've got all these zones working for you. Next thing I want to throw out is this. Okay? There are two exponential moving averages that are automatically built into this plot. Okay? The first one is called, there's what's called actual and sign dependent. So the latter, which is what's called sign dependent, takes into account the price with sign, meaning the price is considered negative if its value is less than that of its previous bar. So it's almost like it's momentumized. It's 0 if the price is equal to its last bar. They call it price sign is 0. And it's positive if the bar itself is higher than its previous sign bar. inside the formula. So once the averages are calculated, they take the moving averages, the two of them together, and they convert it into what's called a percentage ratio. And that's the resulting plot. So what you're seeing here is just like a ratio of 40. 40, 60 would add to 100. So you have to see what you're getting here is a ratioed plot of two moving averages. Then they introduce these levels. What these levels represent correspond to the percentage values. So for additional confirmation, the designer of the PZO suggested this. To accompany the PZO, you need to add a moving average itself, okay, and you need to add, okay, an ADX. Now, this might confuse some of you, so I'll kind of walk you through the first one, which is the easy part. What they're saying is, the creators of this said, add an exponential moving average exponential. Set that moving average exponential to a period of 60 days. 60. Now, here's the thing. A lot of you are going to ask me, can I use this on an intraday basis? Yes, but it's not designed for intraday trading. This is designed for what we call position trading or investing. So if you use it intraday, you're at your own risk and I cannot help you. You don't have enough data intraday to make that call, whether it's a minute indicator or 5. This is designed as what we call a duration smoothing factor. So what you can do is you can establish positions for swing trading for extended periods of time. So the 60-day moving average goes into place. I'll thicken it just a little bit to a 3 spot so you can see it yourself. The idea here is this. The PZO, which is price zone oscillator, be aware of this. It's not designed as a standalone system for just the PZO. It goes hand in hand with what I teach at the Genesis Cog. What I've been teaching at Theo for 10 years. I've taught more masterminds than anybody except for Don. I keep telling you, if you trade off one indicator, you're going to lose money a lot and you're going to blow out. If you trade off 2 indicators, okay, you might have a puncher's chance to survive. 3, you'll be good. 4 to 6, you'll be set. You can't, there is no holy grail of indicators. It doesn't exist. So if you come at me and say, I'm going to continually use my indicator, the same one over and over again, okay, one indicator only, candle, I can't help you because what's going to happen is you're going to blow out eventually and nothing's going to save you. What you need is you need to think like an algorithm. An algorithm works with what's called multivariate. Multivariate means multiple variables. An algorithm looks at speed. It looks at trend. It looks at magnitude. It looks at time. It looks at strength. It looks at overbought. It does everything. The only thing an algorithm does not look at is it does not gauge fundamental valuation. All it does is it's like flying an airplane where you're looking at the gauges. What's the altitude? What's the speed? Is my landing gear working? It's the same thing. Don't trade the PZO without the accompanying or the ancillary complementary indicators. I will not help you. I cannot help you because there's no way to read a market with one indicator. There's no way to fly a plane just looking through the cockpit. You have to have many different gauges to help you negotiate the skies, the landscape, and the landing. It's no different in the market. So you need a moving average. It needs to be set to minimum, maybe maximum 60, maybe minimum 40. 60, the designer of the PZO, back tested for years and said, this is the choice, the 60-day moving average. Okay, that's what I'm telling you. So this is your trend indicator, and trend is not just, oh, it's above or below. That's selling it short. What also matters in trend is the slope of the indicator. If the slope is vertical, it's got staying power. If the slope is flatter, okay, it opens up the treasure chest to take short positions. So whenever I short, well, how does Bierman make money shorting? Everything I'm short has a two-way market. A lot of you short things that are one way. I'm going to short Palantir. I'm down 80%. Why, of course you are. You don't understand. You can't short a vertical slope. It won't work. The only way you can make money is to short when the slope deleverages. It has to come down and turn flat to down. The slope is what drives the algo. Trends are no different. The steeper the trend, the faster it goes higher. Okay? Notice how this trend isn't steep. The trend is flat. That's why you can short this. You're not going to get burned. You won't. The only way you're going to get burned is if there's some black swan event where Home Depot announces, we guided we're up $9 higher. We have $9 of sales. Then you're blown out. Fundamentals will eradicate you. They'll vaporize your account and blow you out. Fundamentals are way more important than technicals. Psychology is way more important than technicals. But just in the moment, absent of news, ceteris paribus, all things being equal, you can short the hell out of this and not lose money. You're below the moving average. The moving average is flat, and it's also turning down. So be aware of the importance of the trend. 60 is the proscribed level that goes hand in hand with the price zone oscillator. I'm just spelling it out for you, people. You need to get the setup right to have an appreciation for this. Without the right setup, it just doesn't work out as well. So look what I'm doing here, applying, okay? There's your VZO, there's your trend. Now, the third wheel in this particular oscillator system, it's a trading system, is the ADX. A lot of you have heard of the ADX, but don't know what it is. Okay, the ADX was designed by Wells Wilder. Wells Wilder designed things like the DMI. Wells Wilder designed ATR, which Tony Rago uses, average true range. Wells Wilder designed the RSI, which I use every day and Gianni uses, the relative strength index. Wells Wilder is the best technician of all time. Like, he is the pantheon. He's the god. Everybody else is below him. He's the best of all time. Wells Wilder came up with a system called the DMI, Directional Movement Indicator. It had 3 different components, DI plus, DI minus. DI plus was the buy signal trigger. DI minus is the sell signal trigger. When the DI minus is above the DI plus, it's a sell signal, and vice versa. When the DI plus is above the DI minus, it's a buy signal. To measure the strength of the trend signal, Wells Wilder came up with the ADX. A stands for average, D stands for directional, X stands for index, average directional index. Okay, I'll simplify this for you. It measures on a 14-day basis, and it goes hand in hand with the PZO because they're both set to 14, which means their data duration is exactly the same, so they're consistent, which is important. Okay, and it's got a Wilder smoothing factor. That's how they smooth out the average, right? It measures the differential between the DI plus and DI minus. Okay, it's a differential indicator is what it does. So the ADX has different reading levels. One of the reading levels of the ADX, okay, is 30, one's 25, one's 20. There's different levels. The highest ADX I've ever seen, because the ADX is a half-bounded oscillator. People are like, oh, what the hell's a half-bounded oscillator? Okay, a half-bounded oscillator simply means that it has a bottom, but it has no top. Has no max, but it's got a min. That's the difference, okay? So when the ADX is above 25, it's called trending. It doesn't mean bullish. Well, that's not what it means. This is a bearish chart. It means the bearish trend you are seeing is strong. It's locked in place. When an algorithm reads an ADX that's above 30, that's trending down, the algorithm's going to crap all over it and beat it to death. You're buying a stock that's about to fall apart, people. This is what this is telling you. The ADX does not predict. It only tells you in the moment the strength of the trend. That's it. So the ADX above 25 says trending. Above 30 means strong trending. When the ADX is below 25, it means weak trending. And when it's below 20, it means no trend at all, which means you can't read the direction one way or the other. When you see an ADX below 20, walk away from that trade. Don't trade it. You have no edge. It doesn't give you any signal or clue how to trade the thing. It doesn't tell you whether it's bullish or bearish. It just says it's basically non-trending. That's what it tells you. So what this is telling you is that the trend is breaking. You're underneath Home Depot. It's breaking underneath. It's a sell signal. And as the ADX gets stronger, if the ADX does get above 30, that means Home Depot is going to implode, or it's about to implode. When you see Home Depot above 30 and it's above the moving average, that means as Home Depot goes higher, it's getting stronger. which means as it's getting stronger, it's getting more algorithmic order flow and participation. That's what it means. So a break above the moving average with a PZO above 40 and a ADX above 30, if you short it, you're going to run out of money. You're going to blow your account out. You cannot do that. You have three buy signals: buy, buy, and buy. And they're not just buy signals. There are three strong buy signals. So they go hand in hand. This one measures strength of the trend. This one measures the direction of the trend. And this one measures the extreme positioning within the trend. So when you start to get above 40, what it's telling you is, okay, you're overbought. But as we learned through Gianni and myself, overbought is not a trigger. It's a condition. So I'm going to short. No, you can't. You know you don't. Why would you short strength? You don't do that. You short into weakness because you're trading with the algo. You short on the way down, not on the way up. And anything above that 20 is a moderately strong trend, or it's a moderately, you're towards the upper end of a range, which is actually getting stronger. That's a buy, that's a buy, that's a buy. Right now, all three of them are telling you what? Strong sell. The only one that's telling you that it's oversold is this one. And guess what? It could stay oversold down here for months, years at a time. This is what we call the ultimate oscillator gauge. I will come back tomorrow and cover this in other ways. But these are what zone-based oscillators will do. I will walk you through the mechanics of this, and then we'll downshift to another type of zone-based oscillator that's not based upon price. It's based upon volume. So this one's absent of sentiment. A volume zone oscillator would be pricing the underlying based upon order flow and sentiment. So now you're starting to understand how an algo operates. This is one of the clues I'm giving you how to read an algorithm. If you guys are shorting today, you don't know what you're doing. I told you this market is totally unshortable. I don't think I'm right. I know I'm right. Look at the price. I haven't shorted it for one day, not one. Because if you follow the system, you make money. You break from the system, you get wiped out. Stop trading against algos. You're in a matrix, but the matrix will eventually turn your way where you can short. Come back tomorrow. We'll pick this up where I left off. In the meantime, I'm going to turn this over. You both, all of you have a special time right now. You're like, I do. You do. Because you've got Brandon and Gianni, okay, teaming up at the same time. It's like Batman and Robin. You got the ultimate momentum guy, and you got the ultimate contrarian pulling it all together at the same time. Couldn't think of a better couple to throw you into. But in the meantime, hear me out. Stop shorting. That's it. Stop shorting this market. Gianni, how am I going to get through to these people, Gianni? What do I got to do?
I mean, I don't know. I think about that sometimes, but it's all part of what makes a market. Eventually it will turn, like you said. But liquidity is it's still fine. In many ways it's improving, about to improve even more. So I'm not shorting in this environment.
Well, what I am shorting, Gianni, is going down. So,
Right. Well, that's the key. That's the
I
key.
mean, I'm short.
Yeah.
Yum Brands covered half the day for a gain. I just got short a
I was
little
gonna.
bit of JCI. That one's rolling over. I missed shorting the Jeffries. Brandon, I thought I was trying to hit the short on Jeffries at 67,
Uh-huh.
and I pennied myself out of that trade. It's down $8.
Well, I mean, the thing is, like you've said, don't short, but yet your most successful trades right now is shorting, right?
Yeah, because the system, my system tells me when to short, and what my system's telling me is don't short the S&P. Wait on it and pick your spots carefully.
I
That's
mean,
what it's telling me.
this is a very this is a really unique environment we're sitting in right now. But I mean, there are just again, it has to be largely retail trade. I mean, they are full bore right now, and they're in
Yeah.
the driver's seat, and it's again, you're not seeing a lot of breadth to the stocks that are rallying, but about half the stocks are above their 50-day moving averages in the S&P 500. But if you pick the right one, it's been working pretty well. And gold has obviously been the best performer out there.
Yeah, gold is it's in a world of its own. But Brandon, I'm not making money on the long side. All my gains are literally short trades. It's the most amazing thing to watch.
Yeah.
So
Well, like I said, you have half the stocks not participating and they're going the other direction. So if you're in the right stocks, either long or short, you're doing pretty well.
it is true. But I got to admit, Gianni's got the hot hand right now. But Gianni, the hot hand eventually runs cold. So I'm
Yeah, it
sure
does. It's not my first time, I've gone cold after being hot too, right? It's all a cycle like
Well,
anything
yeah,
else. So,
every system has this period of time where it's going to give
yeah,
back, right? I mean, if
yeah,
we just went straight up the hill, I mean, that'd be, again, you're not going to share with anybody, right? So
yeah,
it's just one of those scenarios where you have periods where you move forward and you have periods where you step back, and that's the natural cycle.
yes.
All right. Well, I'll let you guys run with it. I unfortunately have to go hit and teach a class today. So have a great day. Gianni, sorry about the Tigers getting their butt kicked last night. Sorry about that.
Well, they live to fight another day still.